Markets won't lack for cues this week. What with inflation just out, a tax reform bill working its way through Congress, and a looming rate hike in the U.S. How to read into all of these? For some insights, let me bring in Luis Dumlao. He's the Dean of the John Golconway School of Management at the Ateneo. Luis, welcome
Hello.
to the show once again. Always good to have you. So, big economic data day again. Consumer prices came in at 3.3%, just released. That's a huge step up from the previous month. Take a look at that. Previous month was just 2.7%.
Yeah.
And that puts the gauge at the highest in more than 2 years, almost 3 years, in fact. Does this number sit well with you, and what do you think that's reflective of?
Well, the three things. Keep in mind, this is February. February exactly last year was two things troughed. One is inflation troughed at 0.9%, and the other one is the price of oil troughed at $30 per barrel. That means that it's easier to go up high when you're starting comparing to something low. The second one is the price of oil. Last 2 months ago, World Bank, all these multilateral institutions, including the market through the futures market, predicted that the oil would go up to $54 per barrel by December of this year. Guess what? It's just February and March, and it's already around. Yeah, it's already $55 per barrel. And the third one is the appreciation of the dollar. Keep in mind, I say appreciation of the dollar, not the
weakening of the peso.
Not weakening of the peso. The dollar has strengthened in every currency in East Asia except for I think Indonesia. So basically, that says a lot that the dollar has indeed strengthened. Yeah.
For me, Luis, I mean, these are all factors that we, of course, are tracking very closely, and you're absolutely right. Oil prices are on the uptick. But what I want to know is, given that today's numbers underscore inflation is definitely on the uptick, and given the strength of the local economy, what should the central bank do? Should they stand pat as they have been all this time?
Well, one thing is this uptick is supply-driven, and textbook economics says is that for as long as it is supply-driven, no policy should be changed, at least aggressively. The second one is the headline inflation, which is what we see here, is now greater than the core inflation. What's core inflation? Core inflation excludes everything that's basically volatile.
Food and fuel.
Yes, which means it reflects the more long-term trend of inflation. So what we see here, the fact that headline inflation has exceeded the core inflation, it's a small indication that this is just temporary. It's more normalization. I guess I have to add the third one is it's more normalization because we keep in mind from 2009 to 2014, that's about more than 5 years, inflation had been between 2 to 4%. We had been spoiled the past 1.5 years that inflation had gone down, but this is the normal.
Is there a chance then that we might overshoot the BSP's target range sooner rather than later, bearing in mind that the target range is between 2 to 4%, and we're almost, a little past halfway point?
It's possible, but if I have to bet on it, I wouldn't bet on it. Reason is the last time inflation went up higher than 5%, that was 2008 global financial crisis. That's a global financial crisis. So unless something so big like a global financial crisis or some currency crisis coming, it's unlikely to breach at 4%. Yeah.
I want to come back to your point about the dollar-peso dynamic. So it is largely a strengthening dollar rather than a weakening peso. But as a consequence, it has pushed the peso down significantly.
Yes.
Finance Secretary Sandy Dominguez says a weak peso is more beneficial than negative. Where do you sit on that spectrum? Do you agree?
Well, there will always be winners and losers. Of course, exporters would gain to that, and basic thing is importers would stand to gain on that. But with the strengthening of the dollar, definitely it's a pressure on inflation, and inflation puts a pressure on the peso. So it's back and forth.
It's cyclical.
Yes, it's cyclical. One affects the other and vice versa. But definitely exporters would stand to gain with the strengthening of the dollar.
And could that be a problem given that we're more of an import-oriented economy?
Lately we have been importing, not because we are importing consumer goods per se. The good news is lately we have been importing input goods. Yes, that could be a negative. The fact that input goods are going to be more expensive, but the good side of it is we sell them. When we produce something that's exported, it could do something good for us.
So it is largely raw materials still, not just
Yes.
Items for consumption.
Yes.
Luis, this is JP down in the newsroom. Now, I'm glad you brought up that point about rising fuel costs, cited as a big reason for the uptick in inflation. In fact, when you look at the graph itself, you're going to see that they pretty much coincide with the rise in Brent crude, really accompanying that uptick in inflation. However, we've seen global crude prices starting to stall already, given the fact that the U.S. production is starting to ramp up a lot. What are the long-term implications for us and inflation? Could this actually see inflation stabilizing in the near term if crude prices stay stalled around 55, 56 a barrel?
Well, multilateral institutions the past 3 months, and more importantly, the market itself predicted it to be just $54 per barrel. So what we're seeing here, it's $55 per barrel. It could be an overshoot. And if it's an overshoot, then we do expect it to settle down soon.
Now, Luis, finally, what did you make of the Finance Department's warning that a watered-down tax plan might be more costly? I mean, is there any chance that more compromises will be made and more revisions to the tax reform proposals that were posited in front of Congress?
I wish it's just economics, right? But the political history says it usually it would tend to be watered down. And yes, if it's watered down, then it would do some negative things for fiscally and to the progressive tax agenda of our government.
Meaning to say that you think that there's a big chance it might get watered down so that it would get approved that much.
I'm not a political scientist, but my experience
History
says
tells us that.
it will be watered down.
Just lastly, very
yeah.
quickly, Luis, let's talk about the Fed. Let's take a look at where odds of a March rate hike are sitting right now. I wanted to bring up this chart to show you 96%, pretty much a done deal at this stage. How big of a concern is this?
Well, it's 1 week away. The market has been anticipating for it since December. So much of the effect has already been absorbed. We are dying for March 15 to end to finally get this over with, so that all these speculation would end. But yeah, Janet Yellen had indicated in her previous speeches the past few weeks that there is a good chance that the word is hawkish. That there is a good chance that we will raise the interest rate.
If there's turbulence on March 15, we're going to call you. We're going to have to leave it there for now. Luis Dumlao, Dean at the Ateneo School of John Gokwe School. Thank you very much for your time. Right after the break.